Welcome to the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge for going on north of 5 years. I appreciate you tuning in and unbelievable changes within the marketplace, and that's sort of the focus on this week's segment is we have to take a look at inflation and what to do with your portfolio. And with that, we're going to combine in with that some estate planning and some tax considerations. So how are we going to relate this or remember what's going on? And if you think of an octopus, there is 8 tentacles on an octopus. So let's consider this as the Octopus and Inflation examination, because we have 8 core things that we need to talk about. So when you think about what's going on in the market, think of this octopus that's going there, and we got 8 things that we need to cover. And just a brief overview of the 8 things that we're going to cover, just like the 8 tentacles on an octopus is. Number 1, let's adjust for inflation. We know that that is there. It's at historical highs. We breached the 40-year ago historical average of inflation. So we have not seen this for 40 years. So there's number 1. Number 2, what are we going to do with our bond portfolio? And a lot of our listeners here on the Professional Edge have bonds in their portfolio. We think it's all safe and secure, but we're going to look at some of the numbers that are actually startling, and you got to say, okay, what place to hide? So number 3 tentacle on this octopus is preferred stocks. What are we going to do with those? A lot of our listeners, being retirees, have preferred stocks. And with that, then they want to have that cash flow. But are those interest rate sensitive? Because we know the Fed just made a historical jump in the interest rates of 75 basis points this week. Number 4 tentacle on this octopus is equities. What are we going to do with our equities? A, are we going to continue to be in technology, because that has been a very hard hit sector? Or number 5 tentacle on this octopus is harvest for our tax asset. So how do we A, take advantage of this downturn in the market to actually benefit yourself financially? Number 6 tentacle on the octopus is gifting. What do we need to consider when we are thinking about this environment? Does it make sense to actually make gifts? Number 7 tentacle on the octopus is sequence of return risk. We have to discover that and see what exactly is going on here. And the final tentacle on the octopus is our emotional reaction to these headlines. So if some of this stuff is confusing or you want additional information, you're always welcome to call our office at 877-654-9798. And with that, then we'll schedule that complimentary free initial consultation, and we can sit down and just understand what you're trying to accomplish. And yes, there are concerns in the marketplace. The big R word, recession, is being discussed at nauseum now. We didn't hear anything about it during COVID. And now we had the Ukraine war, and now we have this inflation, which has now triggered the R word, the recession. So again, if this is of concern to you and you need an objective opinion, do give our office a call at 877-654-9798. That number again, 877-654-9798. So let's turn to the octopus and tentacle number 1, inflation adjustments. Inflation is running at a 40-year high. Think about that for a second. 40 years, a lot of our listeners, if they're in their 70s, they've never seen anything like this back for 40 years. So you were 30 years of age and you weren't really paying attention to the market then anyway. You were busy working your job, raising your family, and going through the daily activities. So a lot of this is not on the radar screen of what we need to do with inflation. So we have to consider what is actually inflation risk. So with that, with inflation risk, we have to understand what the Fed's doing. And basic economics is if there is excess money supply, and we're going to touch on that there are more dollars chasing after a limited number of goods. So we understand that when the Fed pumped in a whole bunch of money into the system, and then the government, during the stimulus of the COVID, pumped in a whole bunch of money. Those were those checks that everyone got, the quote, free money from the government to survive COVID. Well, When you pump enough money into the market, now individuals have this excess money. So with this excess money, they start going for this limited supply of goods. Well, if I'm going to try and get the lumber and there's a back order on lumber, or even materials coming in from China because the export, and we all knew that the docks were all backed up in California. So there's a limited supply of goods available for all these dollars. So I'm going to go in and I'm going to get what I want. So therefore, I'm going to go purchase a whole bunch of this. Well, because I have extra money. So when we look at that, we have multiple buyers going after a limited supply of goods. Well, what does a retailer do? Well, if I have a limited supply, I'm going to raise the price because the demand exceeds the supply. So if the demand exceeds the supply, then prices will go up. And that's inflation, rudimentary as it is, but that's inflation 101. There is too much money in the system, and the Fed, when we look at things, we have to understand what the Fed was doing, and they were buying, if you can imagine this, during the whole entire COVID, and then as recent as a month ago, they were buying $120 billion of equities, meaning bonds, per month. So the money supply, if you can imagine this, the money supply is the Fed buying these bonds, so they're putting these dollars into the marketplace, went up by 40% in the last 2 years. So this free money that the Treasury sent out to you and what the Fed has pumped into the system has made an excess supply of money. So with that excess supply of money, we are going to have inflation. And sure enough, we hit a 40-year high on inflation. You go to the grocery, you go to the gas station. Again, when we think of gas station, there is a limited supply of gas. So therefore, the retailers can increase the price of those gallons of gas. So when we look at that and we say, okay, they're pumping $120 billion a month, not a year, a month into the system. They've been doing that. And if you look at a graph, again, we have that in our office. We'll share that with you at your free consultation. It is amazing, the vertical line, sort of like Top Gun Maverick, that they go on a complete vertical climb. So we have to adjust our portfolio as a listener here on the Professional Edge. So again, if you're not understanding what components or what effect this inflation and the Fed is going to do, and sort of a common understanding is don't fight the Fed. So again, if you're not sure what to do with your portfolio, you are frozen like the deer in the headlights, then give our office a call at 877-654-9798. That number again, 877-654-9798. So when we have inflation, we have to, consider what our investments are that are interest rate sensitive. So think of a teeter-totter in your bond portfolio. Most individuals think the bonds are safe. They're not going to adjust in value. They're just going to sit here and earn me my rate of interest. Well, unfortunately, we are finding out, or individuals are looking at their statements, and their equity side of their portfolio and their bond side of their portfolio has all fallen in value. So when we look at that, why did that happen? Well, think of a teeter-totter. One side is interest rates and one side is bond value. So if interest rates remained low, and they have been for basically the past 10 years from the Fed, 0 to less than 1% on the applicable federal rate, well, lo and behold, then where is the other side of the teeter-totter? Well, the bond values have increased over that course in time and stayed there because the Fed was on the ground at 0% interest rates. So what has happened here in the last 90 days? Well, we got a 50 basis point, and then this week we got a 75 basis point. Never happened in 40 years. So lo and behold, wow, the interest rate shoved off the ground and popped into the air. So magically, what happened to bond values? Well, those had to go down in value. Sure enough, you're going to get your statement this month and your bond value is going to go down again. So that is a correlation on what is inflation sensitive or interest rate sensitive within your portfolio. So again, individual investors think that their bonds are going to be safe. Yes, they do fluctuate in value, and this is an eye-opening experience. We have not had this, again, such a dramatic change in the interest rates for 40 years. And guess what, folks? Probably additional tightening by the Fed is going to come forth. And that's probably going to happen this fall and maybe even again this winter. So again, to make adjustments in your portfolio, you're not sure what to do because you haven't had this crisis for the past decade, then give our office a call at 877-654-9798. That number again, 877-654-9798. So with those bonds, yes, and when we got to go back to that teeter-totter, okay, we look at the duration of the bonds, and if you got a 30-year treasury, then lo and behold, that's dropped over 10%. And you say, wait a minute, a treasury bond is supposed to be risk-free. It's near cash equivalents. I understand that. But lo and behold, when that teeter-totter, think of 30 years as each year is a foot on the teeter-totter. So you're 30 foot away from the fulcrum. And when interest rates go up just a little bit, which they have, 1.5, 75 basis points, and then another 50 basis points, so that's 1.25. So lo and behold, think of that 30 feet away from the fulcrum is going to have a more dramatic decrease in the value of those bonds. So we have to be cognizant of your interest-sensitive investments within that portfolio. So when we look at a client's portfolio, a lot of individuals have these life cycle funds, and within there is bonds. We got to look at the duration of these bonds to see if that makes financial sense. So we make those adjustments within that portfolio. So if we have these low duration bonds, basically 1 to 3 years, we are only 1 to 3 feet away from the fulcrum. So therefore that adjustment in value is less. So think about that for a second. When was the last time that you objectively looked at the duration of your bonds? Well, it's a wake-up call because you will see your statement and your bond value fluctuate, and you'll scratch your head and say, well, my equities are down, my bonds are down. The only thing that's there is cash. That is correct. But with inflation, we know the purchasing power of that cash is also diminished. So we're in a tricky wicket right now. So again, if you want to sit down and have a candid conversation, do give our office a call at 877-654-9798. That number again, 877-654-9798. So again, we're terming this as, what does inflation have to do with an octopus? We've covered 2 of the tentacles. So when we come back from the break, we're going to continue on with the octopus and inflation. My name's Todd, tax attorney, CPA, and certified financial planner. I appreciate you listening to The Professional Edge.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.